Hey guys, Boris from BK Forex. Welcome to the Forex Weekly Technicals from March 20th through March 24th, 2017 for the majors for Euro dollar, dollar yen, and pound dollar. And I think the story this week, after a massive event risk week that we had last week with the FOMC meeting, with the BOJ meeting, with the Bank of England meeting, is actually that the dollar is not a buy. That's just the ultimate verdict of the markets as we're entering this relatively quiet week of event risk. Before we get to the setups on the dollar, let's just take a look at the week as far as the dollar goes and see there is very little on the U.S. side that even merits any kind of attention. I mean, really, the only thing that we have is Yellen talking on Thursday, unemployment claims, crude oil inventories. I mean, that's not even an event for the FX market, and core durable goods. That's it. We literally have nothing. All of the data was this week, and yet the dollar just basically landed with a thud. There was nothing going on. If you look at the actual majors, the resistance support levels are very much left the same. In the euro, it's 108, 106. In the yen, it's much worse even. It's a move against the dollar, with the 115 level failed miserably, as we talked about for the last couple of weeks. They couldn't bust through it post FOMC, and worse, as the markets are closing into the Friday afternoon as I'm recording this, we've broken the 1300, and now we're testing at 1250, which leaves us very vulnerable to this very long-term support of 1150 in the dollar yen. And the pound broke to the upside. The Scottish referendum threat kind of went away. Brexit seems to be the story, and the pound is in a clutch of a massive short squeeze, despite the fact that the fundamentals across UK are starting to really deteriorate. So you're looking at the charts here, and I think the thing that really pops out at you is the fact that the dollar is being sold. Although the euro is certainly one of the weaker trades against the dollar as we enter the end of the week, not for a couple of reasons. One, from a technical point of view, this 108 level is a massive resist point. And I think, in fact, a true dollar decline, a real move against the dollar would be if the euro broke above the 108 next week. That's, I think, a very tall order. I am actually a seller of euro anywhere around this region, because I think it's going to fail and probably come back down. But it doesn't mean that this is the end of the rally. We are in a stealth uptrend in the euro. The highs are higher. There is a very decent trend to the upside here, and whatever euro move we have is very likely to be a retrace down to the 106. The only threat that hangs over the euro is the French election. And even that is a sort of a false threat, because yes, Le Pen is vacillating between the 25 to the 28 level, and she seems to be really holding on to her quarter of the percentage of the population control. But Macron clearly has a strong lead in the second round voting. And he's done a very good job at sort of positioning himself as a reform candidate. So as long as he can just maintain his lead, it's almost a 20-point lead advantage. Very little risk that Le Pen really has a chance of becoming president of France. But nevertheless, until that event completely dissipates, euro certainly is going to be compressed a little bit to the downside. And that's one of the reasons why I think the 108 is going to be hard to overcome. It may poke through it, but I think the full run away from the 108, let's say 108.50 or higher, is going to be much harder to achieve. And therefore, the euro still remains on a relative basis a sell. On the other hand, dollar yen is just the single most telling story of dollar weakness. What's astounding, and we've talked about this quite a lot, that if fundamentals are telling you one thing and price is doing the exact opposite, you ignore the fundamentals and you follow price. We have a classic example of where everything seems to be hunky-dory for the U.S. economy. It's very rosy. Growth is happening. Rates are going up. We're at 100 basis points already. We're only 50 basis points behind the RBA and 75 basis points behind the RBNZ. And yet, the dollar can't get out of its own way. There's something going on in the marketplace. I can't honestly understand it. It could be outflows. Literally, there is not a obvious rational reason for why the dollar is selling off, but that is often a very good reason not to try to buck the market, because the market clearly knows something. And until we see a change in direction here, the dollar yen is a sell and rallies continuously. Really, it needs to clear at this point the 116 level. It needs to come back up above all of this resistance at the 1550 and 1500 level in order to create a lot of conviction in the marketplace that the dollar is ready to be taken higher. For now, it's actually ready to be taken lower, and the tests are going to be to the downside. The test to the downside is going to be essentially the 1200 1150 level first, and then if that breaks, that really opens up the dam for a possible run all the way down to the very key 110 level. If you look at the yen from a longer term point of view, you see a series of lower highs and just massive failures all the way around. And the picture, unless it changes itself around, you could just buy this on spec, hoping that you get a bounce. But the much more likely scenario is that whatever bounce we get is going to get sold again, because the pressure seems to be to the downside, and we don't have any fundamental factor to kind of change sentiment as we go forward. Cable also kind of a strange story, because fundamentally we continue to see weaker and weaker data out of the UK, although the BOE was surprisingly hawkish. And I think the thing that put the juice underneath the cable was the fact that one person on the BOE member board decided they voted for raising rates, and that, I think, shocked the market and completely lifted it off that major support level here at the 122s. However, now it's facing a much stronger overhead. This whole 24, 26 area is very, very big overhead, and now we're going into the Brexit territory. And I can't help but think that, yes, we could get a squeeze on sort of the idea that everything is behind us. But now you have to understand that the Europeans are essentially telling the British that unless they pay up, unless they are willing to settle up their debts with the European Union, they will not get any negotiation out of the European Union. And I think it puts Britain into a very weak negotiating position. Remember, the Europeans are much bigger and much richer than UK is, and UK doesn't produce anything that Europeans want. I can't see how this turns out well for the Brits, and I can't see how well that turns out well for the currency. So therefore, I think we're vulnerable. The squeeze is normal. The squeeze is very, very common in pound, and it can be very painful. But I definitely think that the pound becomes a tremendous sell in the 25, 26 zone against all of this technical resistance and all the negative fundamentals that we have going forward. So that's how the majors shape up. On the calendar, nothing on the UK side. Well, yeah, we have the CPI data coming up on Tuesday. That's going to be interesting. So CPI actually is an interesting factor, because the lower cable has certainly created higher inflation. We're now in a sort of a very negative vicious cycle in UK, where you have higher inflation, lower growth, and tepid wage growth, which really puts a squeeze on spending and is very likely going to even hurt growth more. That may be the reason why the BOE is trying to get more aggressive on the rate hike. But for them to fight inflation means that they're going to put the country into a recession. I don't think they'd be willing to make that trade-off. So I'm willing to bet that pound fails at the 24 to 26 zone on any kind of a rally into it. But in the meantime, the short squeeze certainly could be in play as we go forward. Wish you guys the best luck, the best trading. Boris, over and out.